Welcome everyone, welcome to Humble Trade. Myself Robin, and I hope you all are doing fine. And in this video we're going to be talking about index versus equity. But before we talk about that, first let's understand what is investment and what is intraday trading, which can suit you the best. It's you who want to decide that. So let's get started with that video. Okay, so intraday versus investment. So what is intraday? Intraday आपको नाम से पता चल रहा होगा. What is intraday? Intraday involves buying and selling of any stock or any option within a trading session. Trading session means 9:15 to 3:30 for that 1 day period. Okay, suppose you are buying something today, you have to sell it today only in intraday. Okay, so you can't hold it for forever, or you can't hold it for more than 1 day if you are trading in intraday. Okay, even if you are holding till 225 I mean 325, market will automatically exit all your orders, and all your position will get exited automatically even if you are holding it. Okay, so this is about intraday trading, but investment is quite different. Okay, investment means you are actually buying that stock. Okay, if you're dealing in HDFC or any stock in the stock market, that means you are actually investing it, you are buying it, you are the owner of that stock. Okay, or of that company basically, and there is no liability that you have to exit within that same day. You can hold as long as you want to hold, maybe for a week, year, month, depending on if it's profitable or not. Okay, if it's profitable, definitely I'll suggest to hold it for long. Okay, so let's talk about advantages and disadvantages of intraday. Okay, advantages of intraday: low capital requirement. See, if you are dealing in intraday, definitely the capital requirement is less compared to investment. For investment, you need a huge capital. Even if you are buying for a short term, long term, doesn't matter, you need a good capital for investment. But for intraday, you can start with a low capital. Okay, let's see in the charts here how this thing works. Okay, so this is HDFC. You can take any stock which you want. If you are buying it, okay, see, long term, CNC, long term means you are actually investing in that company. Okay, if you are buying one quantity of HDFC for a long term, you have to pay 1514 rupees per share, which is one quantity. If I increase quantity to 100, you have to pay almost how much? 1.5 lakh around. Okay, so this is about investment. But if we are trading in intraday, let's see how much margin we have to pay. Just 242 rupees. Okay, so that's why the capital requirement in intraday is comparatively less than investment. Okay, let's see for how for 100 quantity how much we have to pay. 24,000 just. Okay, and we can hold this position as long as for 1 day, not more than 1 day. Okay, so this is about the capital requirement. So next thing is high liquidity. Okay, liquidity means encashment basically. If I want to sell something, I need buyers for it. And in trading, there are huge number of buyer and seller. So that means if you want to sell something, you don't have to wait for a buyer. There are buyer already available in the market. Okay, third thing is no overnight risk. Okay, trading, there are definitely risk in intraday trading, but overnight risk is something inevitable. You can't ignore that thing. You can't escape from that risk. Okay, because market will open around 9:15 only. Market is not opening around 3 a.m. or 2 a.m. Okay, so if there's a news flow in the market, suppose there's a fraud in HDFC Bank or any other thing. Okay, so that stock will fall drastically as soon as market open, and you can't escape from that risk. Okay, so there's a overnight risk in investment, and there's this advantage is that in intraday there's no such risk involved. Okay, fourth thing is low brokerage compared to investment. You are paying very low brokerage for your intraday trades, around 20 rupees per trade. You are paying for per entry, you are paying 20 rupees. Okay, in intraday. So let's talk about disadvantages also. So no asset ownership. First of all, you are owning that stock or option for like 1 day, so there is no ownership. You are not the owner of that particular stock or company. Okay, okay, so second thing, high risk. In a longer term, every investment, if you're investing in any good company, there's a risk is very less. The risk is extremely less if you're investing in a long term. Okay, how? Let's see with HDFC only. This is the weekly chart. Let's do it. Okay, weekly chart, it's okay. Okay, if we see in a longer term, see, it's always positive. This dip is because of that first COVID wave, okay, in 2020, uh, around March, right? March, there's a huge fall. This is because of COVID. This is abnormal. This is not normal. So don't fear anything. In investment, if you're investing in a very good company, top 10 20 company, then definitely there's a positive response in a longer term. Okay, but if we talk about investment means, I mean, if we talk about intraday, there's huge ups and down on a daily basis, and you can't be right every single time. Sometimes you get trapped in such fall or such ups and down, and you can lose a good amount of capital. So yes, intraday is quite risky compared to investment. Okay, third thing, constant screen time. See, if you are coming for intraday, definitely you have to spend time with your screen. As long as your trades are running, definitely you have to keep a watch on that trades and see if you are profitable or not. So these are the disadvantages and advantages of intraday. Now you decide if you want to do intraday or investment. Okay, so let's jump into what are index fund, if index funds are safe or not. Okay, we have talked about equity means like HDFC, the company actually, okay, the stocks company, be it HDFC, Britannia, or any I mean Bajaj Finance, Reliance. So these are the equity companies. Now what is an index company? Okay, have you ever heard about index company? I mean indexes. So what are indexes? Let's see what are indexes. So an index is a type of exchange traded fund, ETF basically, that contains a basket of stock security that tracks the component of an existing financial market index. So if in a easy term, basically you are targeting a complete market of that product. You have heard about Nifty, you have heard about Bank Nifty. So these are the indexes. So what is Nifty? Nifty is an index of top 50 company. Okay, that means on an average, if these 50 companies are performing well, so Nifty will go positive, Nifty will go upside. Correct. Whereas what is Bank Nifty? If you've heard about Bank Nifty is an index of India's top private and public banks. Okay, if these banks are performing well, then definitely Bank Nifty is also going positive, will go upside. But if banking sector is performing very low in the market, then definitely Bank Nifty will also fall with that. Okay, so let's understand this with an example. As you can see, there's a pie chart of Bank Nifty representing a valuation of different banks in Bank Nifty. So as per their market capital. Okay, so these five banks, HDFC, Axis, ICICI, Kotak, SBI. So these are the most important banks. Okay, if these banks are performing well in a majority, definitely Bank Nifty is going positive. So this is how an index work. So that was all for today. I hope you have learned something new. See you in the next video. All the best.